Sorry there. All right, had the mic muted. We're good to go. 5:30, 5:31, just a tiny bit late, but we're getting started on a Mother's Day Sunday evening, kicking off the week. Happy Mother's Day to anyone we have in the room who's a mom. I'm sure everyone has the same mindset that I do coming into this week, that we're incredibly disappointed about the lack of appearance from my 76ers, and we got swept by the Knicks. But we'll move on from that. Let's get to the charts. Couple of things highlighting in here on the summary page. Don't fight it. It's just relentless. I haven't seen an opportunity to shorten weeks. I don't see one now. We will get one, but if you're anticipating trying to pick a top, it's just a sucker's game right now. The weekend news, I didn't see anything too scary about the Middle East, anything going on there. So I assume we'll continue higher. I personally am not shorting anything until a previous day's low is taken out. That's my minimum trigger. I'm not saying I would jump in there by any stretch of the imagination. We're still piling higher, but it's just something that I'm doing as a very simple risk control. Talk about no real resistance at new all-time highs, and pretty extended from any real support. I'll go into that in just a second. You can see the power of this move, and it just continues. Sorry for the brief pause. I got a little tickle in my throat, so I got to take a drink every now and then. You can see we're just powering higher. This is ES, which is incredibly strong, but not as strong as the NASDAQ, which is just absolutely relentless. We'll step back here, take a look at the shorter term. This is where I would think we have some actual support. We did do a little bit of about a 6-7 day consolidation here before we started ripping higher. This is the first support I'm looking at, where we tried to dip a little bit lower on, I guess, was that Friday morning? Pre-market, and then we got the jobs report and off to the races again. But that's tiny. There's nothing there, so breaking there, maybe we have a move down. This is what I mean by extended. So NASDAQ just pointed that out, but this is what it looks like. Find me the tradable support in here. There's a tiny bit here, but for me, it would come down, literally probably be down around here before I think we have something we could trade against. Again, this is what I'm talking about by extended. Step back, look at how far removed we are from even short-term moving averages. This is a 20-day, and it comes in at about 27,300, and we're at 29,300. So we're 2,000 points above a 21-day moving average. And you can see the history, even in strong rallies before, nothing like that kind of separation. This is really extended. I just think that highlights the risk. Take stops up, protect any gains you've got if you're running long, but also don't fight. You can hear me say that a couple times. Small caps, there's a change. I've been watching and monitoring small caps versus tech and large cap, and it completely fell apart this week. I think my expectation that small caps was going to outperform for the year is officially dead. So back to the playbook for the last couple of years, big cap tech is leading the charge. So this, I spend time on it almost every week. You can see how tight this range is getting. It's the dollar index. This is the trend line going back to about 2012, a 15-year trend line that is really being respected. If we break this, again, I'm revising another expectation I had that energy would lead the charge on the way out of here. Looking at the charts right now, it looks like gold and silver, precious metals, really took the lead this week. I'll show you those in just a second. Real quick on the next couple of slides, a lot of mention of rates because we are hitting some new highs and nominal levels. But on a charting basis, this is not a breakout. This is nothing, not concerning. It certainly could change at any point, but until I see that, I'm just pretty sanguine on rates and not on inflation. It's consolidating in a tight range the way it has been since early 2025. Yields, same thing. Overall view, just as I mentioned, exceedingly strong if narrow, and don't fight it. You'll get an opportunity when we're this extended and it starts to go down, it'll keep going, but that could be a while. NASDAQ, same thing. I am going to show a chart right at the end that shows how historically extended the NQ is on another basis. But yeah, it's just something to consider. I don't have an answer. Russell 1000 value strong, but Russell 1000 growth is ripping back. We're at new all-time highs here, but look at the recent rally in growth versus value, and we are to new all-time highs here. So growth, I expect to continue to lead going forward. This is what I mentioned, small caps versus NASDAQ. You can see it held. This is almost a year-long, it's actually over a year-long consolidation range. And we held this from the beginning of 2026 right here. And then this week, we just absolutely fell through. And this is why I'm calling probably the end of the expectation. This would be rallying, i.e. small caps leading. China, always keep an eye on this. Sluggish. It's intact. It's okay, but it's not nearly leading the charge the way that EEM is. I did look at this week, and it is exactly what I suspected. Korea, Taiwan, and semiconductors are very heavily weighted in this index, and that's what's really going on here. It's not surprising, but it does look much better than just China in aggregate if you're looking for ex-US exposure. Breadth looks fine. There's certainly narrow, which we're going to talk about right here. This is the performance cap weighted. This week, you can see all the market leaders, hyperscalers, Mag 7, whatever you want to call these, semis, everything here in this bright green, and essentially everything else is pretty much red or mixed. So this is what really carried us this week, and that is a narrow market, but it's also all the biggest companies in the index. So breadth is not a major concern for me right now. That's coming back. Spend a couple minutes on energy. This is the zone that I followed. If I stretch this chart out, it's a resistance zone from a couple of years ago. And it continues to be very important. It's pushing through it, but it just can't accept below here. Every time it dips down, they take it right back up. Came down, it held right there this week. This keeps me bullish. If we can accept down below this, and particularly if we can break this kind of $83 level, which is $11 away, then I think that we're broken. But as long as we stay up here, I'm constructive. That is in the context of, and I'll show that in a couple of slides, energy stocks really got hurt this week. Brent, Seaborn, very important. I know the difference between that and WTI. This is what trades on the overseas international market as opposed to coming out of Cushing, Oklahoma. And it does look more bullish. It's holding higher prices and doesn't have the same supply demand dynamics as WTI. So energy overall, here's natural gas. Again, I mentioned that this is a change in character. It's just every spike has gotten sold for a couple of years. This is different. This is very different than some of the previous rollovers. So I'm keeping it in context of all the other energy stocks and definitely bullishly inclined. We'll have to see what happens with this one. It's not the same as oil, but still very important to the energy picture. Here's where I'm highlighting a change. Gold absolutely led. This was the breakout from September last year, really ripped up into mid-October and then peaking at, what was it? This is the ETF. I think that on the futures, it was like 5,400 or 5,500, well over 5,000. Nice, healthy consolidation. This is the 150 that I keep on here all the time. You can see how well it's respecting it. And this is the 50. I'm actually not a huge moving average guy. I watch them, but I don't think they determine too much. This looks like an exception. It's really respecting it here, 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 and here. I think if we break through this 50-day and accept hold over it, you got to buy it. And I think gold and silver may be our leaders yet again in terms of a weak dollar play. This looks pretty good. And for me, it's right on my radar screen. I'm going to put in alerts right around here. If it goes through them, I'll be looking closely. Bitcoin, again, continuing to rally. The picture is improving. But when you look at the kind of volatility that this has experienced for years, and then this is again a changing character. Chart looks okay. It's doing fine. Let's see how it responds up at some of these larger levels that it's getting pretty close to right here. This is the break in energy stocks I referenced. Hit pretty hard. Still bullish, but these were extended and need consolidation. I think what we're getting is very similar to what I just highlighted in gold. It's very extended. It did a consolidation. You need a break, then it needs to do some time, and it can get bullish again. And money is just rotating towards technology. Here's semis. Here's the whole technology sector, even software is ripping. China is in its own bucket. These look fantastic, and they're going to until they break, and that could be tomorrow or it could be in September. I have no idea. That's why I just keep saying, don't fight it. Key sectors, these all look great. They look fine. They're not doing the same thing as tech is, but for people who are like expecting a market crash or calling for the end of the world, there are just no signs of it. The consumer looks okay. Healthcare lagging a little. Financial is okay, but certainly not problematic. Industrials look intact. All these look fine. So let's get to the last real punchline on this. This is my long-term trend. I think this is a very important chart. I don't see a lot of people doing it. It's a logarithmic chart going back to the 2009 low, and just look at how much these indexes respect the channels. And then look at this one. This is the NQ, again, off the 2009 low. I redrew this because the way I had it drawn before, this was a slightly exceeded the previous high. Now, given that and taking it in and where we are, I just basically just took this up a little bit to account for the acceleration higher. I can redraw one up off of here, but a very long-term logarithmic channel that includes the excesses of the 2021, 2021, 22 bull market, post-COVID, all the, I can't remember the catchphrases they were using, but all the stimulus that we had in the markets. And on a trend basis, we're exceeding that. This is a long-term, we are extended, we are really, really, really extended on a very long-term basis. And it's worth noting. It shows how strong we are. And again, I'm not saying don't fight it. I'm saying when things change, we got a long way to go down to still be in a very bullish trend. That's about it. I'm keeping it short this week with Mother's Day. I know a lot of people have a lot going on, including myself. I'm happy to take any questions. If you have any, drop them in the room. Yep, I'll see it there. And then otherwise, I'm just going to wrap it up. All right. I don't see any. Oh, yep. We got to thank you. All right. Anytime. My pleasure. It really helps me get my game together. So happy to do it. Have a great week. Good luck to everybody. And yeah, I'm in the room. If you feel like dropping in and dropping off some questions, please do so. Have a great week. Thanks.